Joining us now for more in a CNBC exclusive interview is Dow Chairman and CEO Jim Fitterling. Welcome back, Jim. Always good to have you on the show.
Good afternoon, Sarah. Nice to be here.
So your CFO presented at an investor conference today, characterized the recovery in your business and overall as moderate, continuing at a moderate pace, driving sequentially higher business results. Can you expand on that as to what you're seeing out there?
Yeah, we saw a pretty strong third quarter rebound, and we continue to see strength from that third quarter pace. October demand and November demand have been good, particularly in plastics and consumer applications. In those areas, we actually see volume growth year over year. We're still a little bit below year over year volume growth in areas like our polyurethanes business, which goes into applications like automotive, although automotive has improved tremendously. And we're starting to see some good numbers in building and construction. It's modest, but it is improving. And we're also starting to see a good rebound in durable goods orders. A lot of that driven by the fact that we have low cost money, low mortgage rates, and home sales in the United States are up 11% year over year. Also, Asia is coming back strongly. We're starting to see good growth year over year in the fourth quarter in Asia. October, November have been good, and December is off to a good start. It's a little bit unpredictable this year, as everybody knows, but if we continue this pace, I think our outlook for fourth quarter is good.
So as I mentioned, investors have been buying your stocks and other value stocks that typically do well at the beginning of cyclical recoveries. We are expecting this vaccine, hopefully, to start getting administered in the next few weeks. Where are we, do you think, in the economic cycle, and how long do you project this is going to be with us if we do get the vaccine and return to normal?
Well, the visibility has been tough. And when I look at some of the projections for real GDP growth for next year, the median of those projections is probably in the 4 to 4.5% real GDP growth range. And I think given the trajectory that we're on third quarter and going into fourth quarter, we could actually see that come to fruition. And we're doing that, remember, on the back of mostly consumer-driven demand, some return in automotive, but not a lot of capital spending. And if we start to see capital spending increase, then I think we'll get ourselves to the point where everything is getting to year-over-year growth. I would say realistically, we have to look at 2021 because the first wave of vaccines are probably going to go to healthcare workers and frontline workers, and it will take a while before the general population is able to take the vaccine. So we're looking at 2021 as a year where we still have to manage carefully, but by 2022, I do think we see a window where we could be back to pre-COVID type levels.
And Jim, what's your outlook for margins and potential margin improvement over the next couple of years? Do you think there'll be a lot of operational leverage to come through?
I think there will. The costs have been relatively low, and so that's helped. And we are a big demand pull on the upstream. But downstream, there are not a lot of new projects coming on, and demand continues to grow. So in some of the bigger volume areas, we're seeing already year-over-year demand growth. So if we continue that pace, supply-demand balances will tighten in 2021 and into 2022. And I think that's going to help. We saw a substantial margin improvement in third quarter. We're continuing to see that, not as a big a change fourth quarter over third quarter, but I think we're going to continue to see improvement in fourth quarter. And then I think if we see that real GDP growth in 2021, we will see good margins.
Shepard Smith here. Thanks for watching CNBC on YouTube.